Welcome to a new video. Today we're gonna talk about how to use the EMAs in any market and what each of them mean. This is one of my favorite indicators to spot when trend has changed directions, when the market is starting to grab momentum, or when the market is at its total peak for trading conditions. So let's get started. So what is the EMA? The EMA, or exponential moving average, is a line on your trading chart that shows the average price of a symbol, but it puts more weight on recent prices to react faster than a regular average. It's a way for traders to spot trends and make moves. As you can see here on this image, this line that you see on the chart is the moving average. In this case, is the EMA 10. It averages prices over a chosen period like 10, 20, 50 days or even hours and minutes. But the latest prices count more than with simple moving average, so it tracks the market's direction quicker. So for instance, if we're on the daily chart, the 10 EMA will be the average of the last 10 days. And for example, if we are on the 1 hour, if we choose the 200 EMA, it will be the average of the last 200 hours. The same as if we're looking at the 10 EMA on the hourly, it will be the last 10 hours. Okay, now we're gonna set it up on a chart and see what it looks like. First, we click on here, indicators, metrics, and strategies. We type moving average exponential, and we click on here. Since we're gonna use 4 EMAs for this video, we're gonna click 4 times, or you can just use this one. We're gonna click 4 times, and you can see how the EMAs are set up. You can only see one because each one of these is the same EMA, which is the 9, I believe, but we're gonna change that in a moment. Now we're gonna click on here on the eye, so the EMA is hidden, and we're gonna change the EMA to the first EMA we're gonna talk about, which is the EMA 200. Here in settings, we click on length, and we put 200. Now, what is this EMA used for? This EMA 200 is used for trend identification, since it's a longer trend EMA. We're gonna use it to determine direction. That will help you a lot if you personally struggle to determine where the price is going and whether or not you're on the right side of the market. This is the starting point of a trend and change of direction. And you will also see that as price gets closer and a reversal is about to happen, you will also see how price usually goes sideways. You can see it right here. You can see it right here. You can see it. You can see it right here. You can see how as price gets closer and the EMAs get closer, price goes sideways until it chooses one direction. Okay, now that we understand how the 200 EMA works, let's jump into the next EMA. So we're gonna do the same thing we did. Now we're gonna click here, so the EMA 200 is not seen. I'm gonna click here. I'm gonna click on the settings, and I'm gonna put EMA 50. What does the EMA 50 help us with? The EMA 50 indicates a trend starting to gain momentum, and we will generally see that price will interact with this EMA by creating new highs and will serve price while also making deeper retracements. This is when price starts gaining some strength. Okay, now as price goes sideways here and then price goes above the 200 EMA, we start seeing some momentum as price is creating new highs but creating deep retracements, all by surfing the 50 EMA. This shows us how a trend is gaining momentum. Now let's get to the last 2 EMAs, which is the EMA 10 and 20. We're gonna make it visible, set the configuration to 10 and 20. Alright, you can see it here on screen. Both of these EMAs are used for the same purpose, which is to identify when the market has the best momentum as well as it being in best trading conditions. We will notice that price will serve to price and that the retracements are usually small. Like here, like here, like here, like here until it fails. And we'll see it again right here and right here until it fails. And we see it again here and here until it fails. Okay, now let's put everything together. Let's make this visible. We have the EMA 10, the EMA 20, the 50, and the 200 all together. How do we implement this in our system? We will categorize trend in 3 stages: the initial stage, the mid stage, and the peak stage. As we mentioned, the initial stage will be used with the 200 EMA, when price's direction is just starting to change, just like right here. We will use the 50 EMA to identify when price is gaining momentum, just like right here. This is the 50 EMA, and we see price is finally gaining some momentum. And we will use the 10 and 20 to position ourselves for entry, since this is the optimal trading conditions. So whether you use 1, 2, or 3 time frames, make sure that price is always above the 200 EMA in the case of buys. Then as trend progresses, we will likely start seeing highs being created, surfing the 50 EMA and making deeper retracements. Then we will start seeing the EMA 10 and 20 being surfed by price, like here, like here, like here. We want every time frame at this optimal trending state, with the exception of our entry time frame. We're gonna go into a lower time frame, like the 6 minutes. We're gonna point out one of the EMAs being surfed, like this one, and now we can enter once we see a push up, like this one, a move down, and the break of it, right here. Now let's set it up. This will be your entry. We can see how long it went. Of course, this is a game of probabilities, so not each trade is gonna be like this, but with proper management and a trade plan, it can for sure work out. So thank you guys for this video. I hope you enjoyed. I hope it was of value, and I'll see you guys on the next one. Ciao, ciao.